I don't want people that when I scared people with all the negative news that they just totally get out of the market. I've never said that. I've always said that you got to be somewhere between 40 to 60% in cash, not 100%. So I'm saying for all of those people, and it seems like there's a lot of them today calling, that are 100% in cash, yes. Man, look, we're not going to try to time gradually go in, dollar cost average. One of the best ways you can do it is with preferreds. That's why I've been so rabid about getting these preferreds out off the list of my analytical work and get them out to our listeners, because I think it's a good alternative. I have been searching feverishly for bonds, individual bonds. Nothing. I was last night, 11 o'clock at night, I'm looking for bonds and nothing. There's nothing out there. When they come out, I'll be all over that like I'm all over these preferreds. So I think that we need to start weaning back in. I like good, solid equities. Here's what I'm going to say. I like the equities that are on my list, period. And so here's the other mistake. People say, I said 50% get out. Everybody gets all the way out. I say get into equities. They start running into everything under the sun. All the stuff that's not biblically responsible, small caps, all this stuff that I wouldn't put. When I say, and I don't mean to sound, like I know the answers. I don't. But I do know this. I know what I don't know. And what I don't know is every company in the country. But I do know those that are on my list. I know them better than the CFOs of the companies know them, in my opinion. That's how well I know them. So when I say it's time to get in, I am talking about my 170 stocks that are on my list, and I'm narrowing that down to, out of that 170, those that have made the buy list. That's what I'm talking about. And yes, I don't care what the situation is. If you want to wean into those, I'm all for it, long as you understand that they're 8 to 10 years. And yes, my tone has changed because I feel more convinced or feel more convicted that if you're 100% out, you got new money to put in, stick to the buy list. It works. It works. And as long as you can maintain the discipline in the 8 to 10 year time horizon. So yes, I would say that without a doubt, since January or since October of 2007, October of 2007 was probably the last time that I felt semi-okay with the markets. I'm getting close to that point again. The only problem is we live in a different environment than we did then, and my fear is we're never going to see 2007 again from a labor participation standpoint and so many other things. So, yeah, I do feel a little bit more upbeat. I'm not saying we're not having a correction. It's still coming because I'm telling you to stay 50% in cash. But if you're not exposed to the market at all, you got to get a little bit in.